Welcome to the final Pension Division training for 2021. I would like to introduce State Auditor Blaha, who would like to say a few words.
Good afternoon. This is Auditor Blaha. Pardon me for not being on camera today, but I'm traveling. And for those of you outside, know it's about 14,000 degrees. So I'm going to stay in my car and do the event from here. Uh, I just want to thank you all for being here, and I mean you very specifically, because of the work we do. I really value the work you do. Our role at the OSA is that we protect the local solutions that make our communities work, and that is exactly the work that you do as well. To be more specific, and if we could move that, thank you. We oversee over $40 billion in local government spending. Now, we have also recently also signed on to oversee about somewhere in the neighborhood of 20 to $25 billion in federal spending by the state. We do it in three ways. We do examinations like audits and investigations and ensuring legal compliance. We provide support with trainings like this, answering your questions one-on-one, and providing tools like software, for instance. And then finally, we do analysis. We take all the data that we work with, we pull it together into a number of reports, and then give that information back to you with the kind of context you need to make fact-based decisions. Now, specifically, when it comes to pensions, our more specific role is that our local units of government include pension plans, and we review annual reporting forms from relief associations like yours, and then we work to resolve any compliance issues. We certify relief associations to be eligible for fire state aid, and then we provide education materials, resources, and training very specific to the work you do. When it comes right down to it, this work is so important because you are ensuring that your communities are safe. I mean, we talk about, sure, the people that go into the fire, absolutely, absolute heroes. And the work that you're doing is supporting them and making sure that they get some of the compensation and which is really a sign of the gratitude and respect that we know that they all deserve. So thank you so much for the work that you're doing in your community. Thank you so much for digging into the numbers and making sure that resources go where they're supposed to go, and we keep our communities trust, and we support those people who are serving us so well. So with that, I can't thank you enough for the work you do. I thank you particularly for wanting to do it well. And now I get to turn it over to a team that I'm particularly proud of, one that I think is one of the most talented and hardworking public servants team in the state. So with that, I'll give it back to Rose, Maya, Mike, and Molly. And I again enjoy your training, and thanks as always.
All right, thank you, Julie. My name is Molly Resch, and I'm a pension analyst in the OSA's Pension Division. Rose Hennessy Allen, Mike Johnson, and Maya Dabney Miller are here with me and will be able to answer your questions. In today's training, we'll be covering common filing errors we see in reporting forms submitted to our office. We will then answer some frequently asked questions we receive, and we will finally discuss some other topics, including investment authority for fire relief associations. So let's jump right into our first section on common filing errors we see in reporting forms filed with our office.
Thank you, Molly. The first item that we would like to take a look at are broker certification forms, or BC-1 forms. And broker forms are due to our office on an annual basis for relief associations that use the services of a broker. So if your relief association is in fact investing with a brokerage firm and using the services of a broker, we would need one of these submitted on a yearly basis. Some of the items that we find in our compliance checks and when we're doing our file reviews are issues with the broker form not being filled out completely. So I'd like to just go through the broker certification form briefly with you and show you some of the areas that we oftentimes see are omitted when we receive forms. So the first section, the broker information, is the name of the firm that is working with your relief association, and that's essentially the contact information for your broker. Section 2 is the statement of investment restrictions. And so the name of your broker is going to be in this section along with your relief association name. And this section has to be signed by a relief association officer and dated. I'd like to point out in this section that you see on your screen, there are statute numbers associated with this section, 356A, 356, and 424A. Sometimes we find that broker forms that are submitted to our office contain statute numbers that are different than this. And oftentimes what that is a relief association or a broker pulled the wrong broker form and they're submitting a broker form that's intended for the city government. So always make sure that you see those numbers on your broker form and you'll know that that's intended for a relief association. Section 3 is a statement of additional investment restrictions. So the prior section did have statute numbers, and those statutes are the statutes that govern investments for relief associations and govern what asset classes and the thresholds they can invest in those asset classes that are outlined in state statute. So section 3 would be filled out if and only if your relief association would like to place additional restrictions on what your broker can invest in above and beyond what's required in statute. So if you do have additional restrictions for your broker, please fill out this section, sign and date it by a relief association officer, and then please provide an investment policy for your broker so that they're aware of what additional restrictions they have placed on them by the relief association. Section 4 is also a section that we oftentimes see omitted or not filled out completely when we receive the broker form. So this section, there are 3 different boxes with different information in them. One of those boxes must be checked by the relief association broker, and this section must be signed and dated by the broker of the relief association. And these 3 questions are essentially, does the broker have enough SIPC insurance to cover the relief association's assets? Are the assets held in custody with the firm, or does the firm is not a security broker or agent of a security broker? So one of those 3 must be filled out or checked, signed and dated by the broker. Section 5 is the certification section. This has to be signed and dated by the broker as well. And again, as you see, there are statute numbers there that the broker is certifying that they are aware of, that these are the statutes that govern relief association investments and what relief associations are authorized to invest in.
All right, thank you, Mike. Now let's start talking about some of the common filing errors we see on the FIRE form. So one of the first ones we see is in the benefit payment counts on the upper right-hand corner of your plan information tab of your FIRE form. And so what we like to see for those is we like to see it broken down by what type of benefit was paid. So if your relief association paid a service pension, a lump sum service pension, and a lump sum survivor benefit during the year, we like to see a 1 in the lump sum service distribution box and a 1 in the lump sum survivor distribution box. For the member counts on the left, one of the things we occasionally see is that my monthly benefit recipients are entered as like inactive members on that column. Those, we do not want to see them there. We just want to see them in the monthly benefit recipient box. And I also just like as a reminder to remind you that those counts should be the numbers as of year end. If you completed your schedule form prior to year end, as long as the numbers look relatively close, that's completely fine with us. In the next section, the actuarial valuation date for my monthly and monthly lump sum combination plans should be the date of the Relief Association's most recent actuarial valuation based on statutory funding requirements and not your GASB actuarial valuation. And so the reasoning behind that is that the statute has different requirements than what's in the GASB actuarial valuation. And the statutory funding one is the one we have to use for required contributions and for calculating accrued liability. And then the monthly benefit payment amount should also be the amount per month per year of service. So occasionally we see it as the amount a member who served for 20 years would receive per month. And so another way to think about it is how much more would a member with an additional year of service receive per month per year of service? That's what we're looking for in that box. And also just want to remind you again that those ancillary benefits, again, disability benefits and survivor benefits, should have the benefit level matching the 1231 benefit level as well. For the investments page, there's a column for special fund accrued interest. We see special fund accrued interest entered in a wide variety of places on reporting forms, but we want it to be entered in that column right there. Again, the corresponding line it goes with. And again, just as a reminder, accrued interest is interest the Relief Association knows is coming, but hasn't received as of year end. If the Relief Association has any other investments, we'd like to see those listed in the categories above, if at all possible. If not, you can't reclassify it, please put as detailed description as you can, just so we know what is as well. If the Relief Association is invested in unit investment trust, we ideally like to see those listed in the corresponding asset classes. If you're unsure what the unit investment trust is, or maybe it's a multi-asset class, go ahead and put in other, and then we'll take a little bit deeper dive into it when we review the Relief Association's reporting forms.
Thank you, Molly, for starting us off with common filing errors we see on the FIRE form. Let's launch into our first poll. To answer the question, where should the special fund accrued interest be allocated for in the FIRE form? Please include the special fund accrued interest in the special fund accrued interest column on the investment page on the FIRE form.
All right, thank you, Maya. So now let's look at the revenue section of the financial information tab. So if your Relief Association collects member dues or member contributions during the year, we do have a line for that on our reporting form. It's the fourth line from the top in the revenue section. So we want to see those dollar amounts entered in that line for the corresponding fund. When your Relief Association receives its fire state aid during the year, you receive it as two different chunks. One's a regular fire state aid, or that 2% money, and there's supplemental state aid as well. We do want to see both those numbers combined in the fire state aid line on your reporting form. If your Relief Association invests with the State Board of Investment during the year, we want to see those fees paid to them entered in the investment management fees line. If your Relief Association invests with the State Board of Investment and a broker, we want to see both. We do want to see those dollar amounts combined in that one line. For our relief associations with outside donations and other income, we want you to provide as much detail as practical when you enter those in. We know very well that it would be not worth either one of our time for you to enter every single $5 donation separately. But that being said, if you have a year where you have a large amount of donations coming in, if you can break it down by maybe month, quarter, or basically let us know it's from individuals, businesses. Those types of details are really helpful for us. And if possible, if you can reclassify it into any of the other corresponding revenue categories, that would be fantastic. If your relief association contracts with more than one municipality, or maybe you have like a city, a town, and a rural fire association, since you're contracting with all of those, we want to see all of those enter the total in the municipal contribution line. On the expenses side of it, for benefit payments, if you pay more than one type of benefit out during the year, we want to see it broken down by line. So again, in my running example where you have a service pension and a survivor benefit, we want to see the dollar amount for that service pension in the first line of the benefit section, and the survivor benefit amount be entered in the third line. For other expenses, we often see things that can be reclassified into one of the corresponding categories, entered into other. For example, we want to see training expenses in the training line. Any payroll taxes or trustee stipends should be entered in the salary expense line, along with any other officer salaries paid. If your relief association paid insurance premium during the year, we want to see those as dues. And again, we want you to provide as much detail as practical. Again, we don't need you to list out every single $2 time you bought stamps, but again, we do want to see enough detail we can tell you, tell what is and make sure everything's correct with that. If your relief association bought equipment or donated money to the city for buying equipment, we do have a couple of suggestions for labeling. If you bought your relief association bought that equipment directly, we want to see it labeled as equipment purchased by the relief association. If the money was donated to the municipality to buy that equipment, please label it as like donation to the city or municipality for buying equipment. As a reminder, special fund to general fund transfers are not authorized. Only money can be transferred from the general fund to the special fund. In the next section for accounts receivables and other assets, we sometimes see special fund accrued interest entered in one of those lines. For that, we want special fund accrued interest entered on the investment tab in the special fund accrued interest column. I also just kind of want to review a little bit more about how we calculate accrued liability amounts. For my DC plans, I like to think it's the easiest because of the nature of DC plans, assets always equal liabilities. So your accrued liability amount is just your special fund ending net assets. For lump sum plans, the accrued liability amount can be found in your schedule form, and then that amount is reduced by any service pensions that were paid, but were listed as active or deferred on your schedule form. For my monthly and monthly lump sum combination plans, this amount is based off of your actuarial valuation data, and there is a little bit of adjustment for benefits paid during the year. If your relief association has any accounts receivables or accounts payables for the year, it would be helpful for us if you entered some notes in the notes section that tells us what they are, or if there's any other information that maybe you would think would be helpful for us, or things you want us to check up on, please put notes in that notes section as well. If you want to add paragraph breaks, you'll just need to press the Alt key and enter at the same time, and it will enter different paragraph breaks. On the cash flow tab, we do want to see investment management fees reported here, but we don't want to see things like special fund transfers, interest, and dividends. We also see lots of mislabeled cash flows with your cash flow labels. So for example, sometimes we see salary expenses labeled as administrative expenses, prior year benefit payments labeled as other cash flows out. And for prior year benefit payments, we do want to see those labeled as benefit payments out. Sometimes we see supplemental benefit reimbursements as state aid. Again, there's a supplemental benefit reimbursement option. And so just as possible, please label them with the corresponding cash flow label. And we also want to make sure you are only using the ones from the drop-down list, because otherwise they can cause errors when they import into our system.
Thank you, Molly, for covering how to label cash flows on the FIRE form. Let's launch into our next poll on this topic. Let's review the answer of the poll. Which of the following should be included on the cash flow page? State aid, benefit payments, and investment management fees all should be included on the cash flow page. It happens quite often where investment management fees are omitted from the cash flow page, in which they should be included. Relief associations do not need to include special fund to special fund transfers, nor interest or dividends earned.
All right, thank you, Maya. So every year we have a few relief associations join the statewide volunteer firefighter plan as administered by PARA. And so I just want to briefly go over how to fill out your reporting forms if your relief association is in this scenario. And I do want to recommend that you contact our office with any questions on this slide. For the special fund investments page, the only investments that should be reported on that page should be any investments that were not transferred to the statewide plan as of year end. So transfers to PARA should not be on there. Again, I only want to see what was not transferred. So the amount transferred to PARA should be reported in the other assets line of the financial information page. And that should be the amount transferred as of year end. And that amount can be found on the December 31st State Board of Investment statement. If you don't know where to find that, please give our office a call and we could point you in the right direction. The transfer to para amount should also be included as a cash flow out on a cash flow page with a description of like transfer to para, transfer statewide plan, transfer, something that basically tells us it's the amount you transfer to the statewide plan. Any additional amounts that need to be transferred to para as of year end, again, what was not transferred should not be included in accounts payable or accounts receivable. And we will just see that on the investments tab of your fire form. And again, if you have questions on this, please do not hesitate to call our office and we can walk you through it.
The next form we'll be taking a look at is the schedule form, and the schedule form is due to the municipality or township by August 1st of a given year. And this allows for the municipality or township to use the completed schedule form if there are any budgeting questions regarding the Relief Association and contributions that the city or township would need to make to the Relief Association. As you can see, this is the schedule form. This is the second tab of the schedule form where you will enter in your active members. And then also you can see at the top of the form, it looks somewhat different this year than it has in the past. And that's because the statute was updated to include a new accrued liability calculation. So in this instance, we have the benefit level that's in effect when the Relief Association completes the form. Now there are two additional entries that need to be made into the schedule form, and that is the maximum retirement age for the Relief Association, and then the number of years required for full vesting. So both of those, along with your benefit level, should be in the bylaws of the Relief Association. So if you have any questions regarding what to input into those three categories, please consult your bylaws. And if for some reason you don't have one of those limits in your bylaws, please go ahead and revise your bylaws, which can be done using our sample bylaw guides on our website. So first, you'll enter in your benefit level and the additional two items that are now required. And as you can see, all of your active members are also included on this section along with their status, entry date, and date of birth. And one of the issues that we often see with the schedule form is when a member is paid, how do you account for that member on the schedule form? And there's a couple of different ways that it can be done. The first would be to list the member as paid, as you can see on the screen on the left-hand side. And if this is done, that will reduce the liability for the Relief Association on the financial tab of the schedule form. Now, if you list a member as paid, you will also need to have a projected expense for that member on the financial tab of the schedule form, as you can see on the right-hand side of the screen. So this is a projected benefit expense, and what that does is that reduces the assets as well. So that evens out the assets and liabilities. If you just had the member listed as paid but did not have a projected expense accompanying that, the assets and liabilities would not be balancing out correctly. The other option that you have is to leave the member status as active or deferred. In this way of accounting for a member that was paid, this will not affect the liability on the schedule form. So when you are completing your fire form and it asks you for your accrued liability, if you did not list a paid member on the schedule form as paid, that member's accrued liability will have to be deducted from the accrued liability on the financial tab of the schedule form. Once you do that, you can enter in that amount onto your fire form on the financial tab of the fire form where it asks you for your accrued liability. So with the schedule form being due August 1st of a given year to the municipality, there are situations where a Relief Association will increase their benefit level after it's been submitted to the city or township. In this instance, a new schedule form will be required with the increased or decreased benefit level on that new form. Whenever a benefit level changes on the schedule form, please be aware that we will also require a new signature page for that change in benefit level. And you will be able to see if the benefit level change has been taken into account on the schedule form by looking at the signature page of your schedule form, and it should report the changed benefit level on the schedule page. So when signing a new schedule page, make sure that the new benefit level is reflected on the signature page for that schedule form. And if you have any questions about how to account for members based on breaks in service, leaves of absence, their status during a given year, and you don't know how to account for them, please give us a call and we'll help walk you through that.
Thank you, Mike, for starting us off with common filing errors our office often identifies with the schedule form. Let's take a look at our next poll. To answer if the Relief Association will need a new signature page if the benefit level is revised after being initially submitted is yes. The schedule form signature page must correspond with the benefit level in effect at year end.
The next section of the schedule form that we often find some issues with and the tab that also contains a lot of information that you will need not only for other forms that you are filling out, but for required municipal contributions, if there are any, is the required contribution tab of the form. One area that we see oftentimes omitted or the incorrect amount is reported is in line 9, which is the administrative expenses. So in this section and on this sample that we're looking at, we're filling out the SC21, so the 2021 schedule form. And so for line 9, the admin expense amount reported on the prior year's fire form should be used in this situation. So being that it's the Schedule 21, to find out what the 2020 admin expense would be, you would go to your financial tab of your fire form from 2020 and go down towards the bottom to find the total admin expense, and that amount should be entered into that cell. The next line that's quite important is the 10% of surplus line, line 11 of the schedule form on the required contribution tab. And the 10% of surplus amount will be used on the next year's MBW. So in this instance, the 2022 maximum benefit worksheet will use what line 11 is reporting, and that amount should be entered into the 2022 maximum benefit worksheet. In this instance, there was a surplus, and so on the financial tab of the schedule form towards the bottom, you will see whether or not there is a surplus or a deficit for your relief association. If there is a surplus, the amount entered into line 11 on your screen will be, or it's actually calculated for you, not entered, but you will see the amount, which is 10% of the surplus amount reported on the financial tab of the schedule form. If you do not have a surplus in a given year, line 11 will show 0. The last line that is very important is the required contribution line, line 15. And this reflects the required amount the corresponding municipality must contribute to the Relief Association. And the SC form will state in which year the contribution is required to be paid. So in our example on the screen, it's 0, so there would not be a required contribution due from the municipality to the Relief Association in this example. If there was an amount reported in line 15, that would be a required contribution that is due from the municipality to the Relief Association. And I would like to point out that, again, we are filling out the SC21 in this instance. And if line 15 reported amount other than 0, As you can see on the form, that amount would be due to the Relief Association in 2022. So for any instance where a required contribution is due, do not pay that amount in the year you're filling out the form. That amount will be paid by the municipality to the Relief Association in the next calendar year. So in this instance, 2022, because we're filling this form out in 2021. If a required contribution is not due from the city to the Relief Association, please be aware that cities are able to make voluntary contributions to relief associations, even if a required contribution is not due. So if the municipality would like to make a voluntary contribution to the relief, they can certainly do so at any time.
Thank you, Mike, for going into more detail covering the calculation of required contribution page located in the schedule form. Let's launch our next poll on the topic. To answer the poll, and as it was shown on the previous slide, you can find the required municipal contribution amount on the required contribution line, which is line number 15, located on the schedule form.
So the maximum benefit worksheet is a worksheet that is filled out by defined benefit lump sum plans, and that is included in the schedule form for the plans that use the schedule form, again, lump sum plans. Also, monthly lump sum plans will use the maximum benefit worksheet. In those instances, the maximum benefit worksheet will be included on the fire form for monthly lump sum plans. So if you're a monthly lump sum plan, you will find the maximum benefit worksheet on the fire form. And so to take a look at the maximum benefit worksheet, again, assuming that we're completing the 2021 maximum benefit worksheet, all information that is going to be entered into this maximum benefit worksheet will be pulled from prior year schedule and fire forms. And a couple of the areas where we see the most errors when we receive forms is with column C and column D, the 10% of surplus and then the active members in the Relief Association. So in column D, the number of active members in the Relief Association should be the number reported on the prior year's fire form. So you can see that we need to enter data for 2020, 2019, and 2018. So the active members in the Relief Association will be pulled from your fire form from the years 2020 through 2018. You will find the active members total on the plan information tab of your fire form, where it will list the total active members for that year. So that amount that's entered on the fire form should be entered into the section active members in the Relief Association on the maximum benefit worksheet. So in this instance, the 2020 through 2018 amounts will be pulled from that fire form and should match what is reported on that fire form. Another section that we oftentimes see some issues with is the 10% of surplus column, column C. And the 10% of surplus should be reported using the most recent updated version of the prior year's SC form. So in this instance, again, what we just went over, if you go to the required contribution tab of your prior year schedules for 2018 through 2020, go to line 11 of the most recent updated schedules for those years. You will find the 10% of surplus if there is an amount in that category. If your prior year surpluses are zero for those years, you would enter zero into those columns for any that would apply. If there are amounts reported as 10% of surplus on those prior year schedules, then you would enter those amounts into the current maximum benefit worksheet where they apply as well. Column A and B, fire state aid and supplemental state aid and municipal contributions, those would all be pulled off of the financial tab of your prior year fire forms, and you would enter them accordingly based on the year that they occurred. Once you've entered in all of your information, the form will calculate the average available financing per active member for the most recent 3-year period, and then also the maximum lump sum benefit level that the Relief Association can offer its membership under current statute. So the maximum allowable amount for a benefit level would be the maximum that the Relief Association could increase their benefit level to if they desired to do so under statute. We always recommend that Relief Associations, when they're determining if they want to raise their benefit level, take a close look at the financial health of their plan and see what increasing their benefit levels can do to the financial stability of the plan going forward to make any of those decisions.
All right, thank you, Mike. Let's look at this defined contribution table next. Okay, so for lots of our tables, we sometimes see the statuses are not updated for year end. So if your member was paid during the year or they went to change status from active to deferred, we do want to see the status change to the corresponding one. We also don't see a lot of leave of absences or breaks in services entered on our DC tables. So if a member, wintered in Florida for the year and had 3-month leave of absence, or didn't meet the requirements for the year, we do want to see that leave of absence amount increase. And the same would also apply for your return to service members. We would want to see their original entry date and then the leave of absence or break in service equal to the time they were not an active member of your department, as well as any other leaves or breaks in service they may have. If your member is deferred or separated not vested, we do want to see a separation date entered on the reporting forms. And inactive members should not have separation dates. So I do want to review the difference between inactive and separated not vested, because we do see those kind of confused a lot. So an inactive member is somebody who's going to leave of absence or break in service, but has not yet separated from your department. Whereas a separated not vested member has separated from active service and active membership with the Relief Association and has not met the requirements to receive a service pension. So if your Relief Association requires 10 years of active service to receive partial vesting, then this member would have 9 years or less in service credit. And we do want to see the revenues and expenses allocated on your DC table according to the bylaws and applicable state statutes. We do have a statement of position on our website that goes over how to allocate the different categories on your DC table. And if your bylaws do not line up with state statute or that statement of position, we do recommend that the Relief Association update its bylaws. We have sample bylaw guides on our website that do contain language about DC plan allocations.
So let's jump into our second section where we will cover questions and answers our office is commonly asked. Some of these questions and answers you will be able to find on our frequently asked questions section on the OSA's website, while other questions were posed from one of the earlier training webinars from the past 2 weeks.
One question that we often get is, what exactly is the relationship between a Relief Association and the city or town fire department? The fire department and the Relief Association are 2 separate entities, but they interact with one another quite often. So the city and town fire departments are departments of the city or town, and this is going to be just like any other department of a city, such as public works departments, parks and recreation, and departments similar to those. And in the instance of city departments or township departments, they are under the control of the city and townships, and a town board or a city council would oversee the local municipal departments that are under their purview. And so when it comes to the city fire department, for instance, the city fire department is controlled by the city, and any expenses that the fire department would incur or would need in the future to purchase equipment, things of that nature, would go before the city council, and the city council would generally approve of expenses by a 2/3 vote. and they would take a look at the expenses of the fire department to make sure that they're in line with what the city wants for their fire department. And so the city controls these departments, and they're paid for by city finances and taxpayer funds. A relief association will be affiliated with a city or town fire department, but it is a separate entity from the fire department. And so much like a city that is governed by a city council, a relief association has a board of trustees that oversees the finances and the management of the relief association funds. So a relief association is made up of a 9-member board. 6 of those members will be from the from the relief association, and 3 of those members will be city members or municipal members of the city. And so I know on the next slide we will be taking a further look into the board of trustees, but it's important to know that the differences between a city fire department and a relief association are that they are separate entities, but there are relationships between the city and relief association that are noteworthy, such as when it comes to a fire relief association, oftentimes a relief association will not be able to increase their benefit levels without city approval. In those instances, the relief association would ask the city to approve a benefit level at the city council level, and the city council would then be able to determine if they want to approve or not to approve a benefit level. So there is a relationship there. Oftentimes, when relief associations are certified for state aid, the state aid is transferred to the city or township to be paid over to the relief association within 30 days of receipt. So there are interactions between the city and relief associations, and they are also separate entities. We always encourage that municipalities, townships work very closely with their relief associations. And we found that a good working relationship between the municipality, townships, and their respective relief associations makes for a very smooth relationship if they're working together and there's open lines of dialogue between the two entities. So the other question that we're often asked is who should make up a board of trustees? So the board of trustees for all fire relief associations consists of 9 members. Again, 6 trustees are elected from the relief association membership, and 3 trustees come from the municipality or municipalities. And the 9 members is set in statute for all relief associations. So if your relief association has a board that consists of another number other than 9, we would ask that you would review your board of trustees, take a look at our statement of position on board governance, and also you could use our sample bylaw language to update your language in the bylaws to comply with current statute. So the 6 trustees that are elected from the Relief Association's membership, generally 4 of those are considered officers: the president, vice president, secretary, and treasurer. And the officer's duties are generally outlined in the bylaws for each specific officer and what their job duties, what their responsibilities are going to be in their particular relief association. So if an officer is new to the Relief Association board, you have questions about what your duties are as an officer, you can generally go to your bylaws to determine what you're responsible for in your particular relief association. One caveat to this, 6 trustees that are elected from the Relief Association, in terms of monthly plans, they are able to have a retired member that is currently being paid as a member of the Relief Association board if in fact the board elects them to that position. Now taking a look at the trustees for the municipalities. There are 3 trustees. one of the trustees will always be the fire chief, and that is also a requirement under state statute. In addition to the fire chief, municipalities will have an elected official and an elected or appointed official that will make up the 3 members that serve on the Board of Trustees from the municipality. The municipal trustees have the same rights and responsibilities as the Relief Association trustees. They are all fiduciaries responsible for ensuring that the investments of the Relief Association are being invested within compliance of state statute and also following the investment policy for the Relief Association. The Board of Trustees also has a fiduciary duty to the taxpayers of the state of Minnesota and also the municipalities which they are part of. And so when we talk about fiduciary duties to the taxpayers, taxpayer funds fund state aid that go directly to relief associations, and municipal contributions and any donations that the city would make to the Relief Association would also be subject to those fiduciary responsibilities, because those are local taxpayers that are funding those responsibilities. So if your Relief Association ever has questions about the Board of Trustees and their duties, please take a look at our website for our statement of position. And if you're not finding your answers there, please contact our office with any additional questions.
All right, thank you, Mike. So one of the other common questions we get is if there's a way to check to see if your reporting forms have been received or which reporting forms you still have outstanding. And we would recommend that you contact our office, and we can definitely look it up for you in a very quick time span. Our individual contact information can be found on the Contact Us page of our website under the About the OSA drop-down menu. Now, one of the most important things we do at Pension here is certifying relief associations as eligible for state aid. And so another question we get is when and how much state aid can we expect to receive? So the state aid is normally transferred to the municipality about 2 weeks after the state aid deadline. So if your relief association is certified as eligible for state aid for the first round of state aid payments through the September 15th state aid deadline, the payments normally go out on or about October 1st. For November 1st deadline, it's November 15th. March 1st is March 15th, and June 1st is June 15th. So in order for Relief Association to be get to the point where they're eligible for state aid, you first have to file your reporting forms with our office, and then our office has to conduct a review of any of your reporting forms, and the Relief Association has to resolve any issues identified during our review. You know, maybe you're missing a signature or something like that we just want to double check on. And once you have all of those done, you'll be marked as certified as eligible for state aid from our office. And then just to make aware, cities do have, or municipalities do have 30 days to transfer state aid over to the Relief Association for deposit in your special fund. And when the state aid is transferred, it is broken down to 2 parts. When sent to the municipality via electronic funds transfer, one's your fire state aid portion, so that 2% money, and the other portion is supplemental state aid. Those 2 together make up your fire state aid total amount, and the total does have to be transferred to the Relief Association. So if you're wondering if you got the right amount because it looks just a little bit different than last year, we do have a list on our website of all the state aid amounts, and that can be found on the pension documents page under the training and guidance heading.
Thank you, Molly, for covering when and how a Relief Association can expect to see state aid. Let's take a look at our next poll. To answer the poll, if the Relief Association was certified for the first round of state aid, when should the municipality expect to receive the payment? Is on or about October 1st. Again, if the Relief Association was certified for state aid during the first round of payments, that means that all of the reporting information due to the OSA was submitted, reviewed, and any issues were resolved by September 15th. Then state aid payments are normally made out to the municipality roughly 2 weeks after the certification deadline. So in result, 2 weeks after the first certification deadline is on or about October 1st.
All right, thank you, Maya. So another question we receive a lot is about supplemental benefit reimbursements and calculating the amount. So the supplemental benefit is calculated on the pre-tax lump sum distribution amount prior to any deferred interest being added. So for a service pension, a lump sum service pension, or a lump sum disability benefit, it's 10% of that pre-tax lump sum amount up to $1,000, again, prior to deferred interest. And for survivor benefits, it's basically doubled, 20% up to $2,000. And again, if a member is deferred, they do not earn deferred interest on that supplemental benefit.
Question that we often get in a given year when relief associations and CPAs, who's ever filling out the relief association forms, have is when can funds be transferred out of the special fund and or general fund? And so the special fund of a relief association is the pension fund, and assets may be dispersed only for purposes expressly authorized under Minnesota law. And so under Minnesota law, things such as benefit payments, investment management fees, certain admin expenses, administrative expenses outlined in statute can be dispersed from the special fund of the Relief Association. If the statute does not specifically state that something can be dispersed from the special fund account, then under statute, it would not be an authorized expenditure. Disbursements from the general fund can be made for any purpose authorized by the Relief Association's articles of incorporation or bylaws, unless prohibited by other applicable laws. And so for the disbursements from general funds, we generally see things such as fundraising expenses, expenses for things such as training, retirement dinners, things of that nature. As long as they're authorized under the bylaws, then they're generally acceptable disbursements from the general fund. And so if you ever have any questions, we do have a statement of position, again, that outlines what can be paid for from the special fund, what revenue should be going into the special fund and general fund based on statute and the bylaws of the Relief Association, and that is available on our website. And so oftentimes we'll get questioned, what happens if money is deposited into the special fund but was not intended to be deposited there? We would generally look at that as a deposit in error. And we ask before any funds are moved from the special fund to contact our office so we can determine, number one, if it's not supposed to be placed in the special fund. We would get background information on what exactly occurred, if it was a legitimate error or accident, if there was some other type of ill intent that was part of the deposit in error. And then we would take you through the steps to remedy that situation. And generally what that means is we receive documentation from the Relief Association in the form of bank statements showing the deposit into the special fund. We'll get some type of written description that it was placed into the general or the special fund in error. And generally we'll have an affidavit process where the person that deposited the funds in error will sign off stating that it was in fact an error and an accident. There was no ill intent, and the description behind what exactly happened. After we review that, the affidavit would be signed if in fact it was unintentional error, at which point the Relief Association would be able to transfer funds from the special fund into another account, generally the general fund of the Relief Association. We would then require documentation showing the transfer from the special fund to the general fund, and we would make sure that it was in the amount of the error only and did not exceed that amount. One area that we oftentimes see on our forms when we're reviewing them is equipment being purchased from Relief Association's general fund for the intent of going to the fire department. So fire department merchandise, fire department equipment, things of that, in those situations where the Relief Association is buying those directly. And so Relief Associations are allowed to donate money to the municipality from the general fund for purchasing equipment. And we recommend that rather than purchasing equipment for the fire department, the Relief Association donate the funds to the municipality for the purchase. And so this goes back to the relationship between the municipality and a relief association. Again, two separate entities. And so if a relief association would like to purchase equipment for a fire department under the oversight of the city, we would ask that the relief association go to the city council and offer to make a donation to the city to help purchase equipment. And we recommend that over the Relief Association purchasing equipment directly for the fire department, because by donating the funds to the city council is then able to review the donation request, determine if it's equipment that the city does in fact need, and then the city council can vote to accept that donation, usually again by a 2/3 majority. If a relief association purchases equipment for a fire department without the consent of the city council is not able then to take into account the other aspects of accepting that equipment under the oversight of the city. And some of the other things that cities need to take into account when accepting donations, making or purchasing equipment for their fire department is what are the long-term aspects, the ramifications on the city finances through increased liability insurance, upkeep of that equipment. And so if a relief association purchases it directly, the city is not able to take into account what the other liabilities can be with having that equipment under the city oversight. So we always recommend that a relief association offer to make a donation to the city. The city council can then take up that issue, take a look at additional things that the city might need to look at, impact on finances, and then make a determination if they're going to accept that donation from there. So we always encourage that the city and relief association work closely together in situations like this, so everybody is included in the final decision-making process.
Thank you, Mike, for covering how relief associations should go about purchasing equipment. Our office received some questions concerning this topic after it was brought up during our new trustee training webinar. Let's launch into our next poll on the matter. To answer what is the best practice for relief associations that want to purchase equipment, we ask that relief associations make a donation to the municipality that, if accepted, can then be used to purchase equipment for the fire department.
All right, thank you, Maya. So another question we often get is about records retention schedules and which one the relief association should follow. So when it comes to records retention, there are 3 different options. A relief association's board may choose to adopt the general records retention schedule for fire relief associations in its entirety and then notify the Minnesota Historical Society of its adoption. The relief association could modify the general records retention schedule or create their own schedule. If they go that route, if your relief association goes that route, you'll need to submit a proposed schedule to the State Records Disposition Panel for approval before implementation and destruction of any records. The Relief Association can also do nothing and keep all records forever. And as a reminder, a records retention schedule defines how long certain records must be maintained before they can be destroyed. And even if a records retention schedule is adopted, some records will need to be permanently retained. And we do have a statement position available on our website called Management of Records that provides more information regarding records retention schedules. Another question we often get is about ratification of the Relief Association's bylaws and bylaw amendments. So this one depends more on your plan type. For lump sum plans, monthly plans, and monthly lump sum combination plans, the municipality is usually required to ratify any bylaw amendments which affect service pensions or benefits payable from the Relief Association Special Fund before they come effective. So that normally means you have to have municipal approval for benefit increases, vesting changes, and those types of things. On the flip side, our defined contribution plans have no municipal or independent nonprofit firefighting corporation ratification requirements. because contributions for these plans are not statutorily required. The only bylaw provision that DC plans need municipal approval or municipal ratification for is the amendment to allow EMS only plans to join the Relief Association because it spans the eligibility pool. And some Relief Association bylaws do require municipal ratification for all types of bylaw amendments. So if you're reviewing your bylaws and looking to update them, you should double check to see if all ratification requirements are met. There are certain scenarios where relief associations can increase their benefit level or make bylaw changes without municipal ratification, and this is called the 90% rule. And so for more information on this, please contact our office and we can go through it in some detail for you. Another question we get is regarding gambling funds. And for gambling funds, we highly recommend that the Relief Association contact the Minnesota Gambling Control Board for more information, because gambling funds quickly go outside your area of expertise, and Minnesota Gambling Control Board does regulate all lawful gambling in the state of Minnesota.
Our next and final section covers a couple of topics we'd like for relief associations to have a little bit more of an insight on. Mike is going to kick us off with information on the investment authority a relief association has. Molly will touch on the information that should be included in an investment policy. And finally, Mike will wrap us up with the maximum benefit worksheet.
So this slide and then the following two slides make up our statement of position on investment authority for relief associations, and that is available on our website. But the investment authority for relief associations is set in statute, and statute governs the types of investments, asset classes, and certain thresholds for asset classes that relief associations are authorized to invest in. Another component of the statute is that it outlines an expanded list and a limited list of authorized investment securities that reliefs can in fact invest in. And so the expanded list of authorized investments is a much more complex list of securities. The limited list of securities is usually tailored towards more fixed income type investment classes. So if a relief association wishes to invest through the expanded list of authorized investments, they would have to meet one of four criteria or conditions. And as you can see, the relief association must have special fund assets with a market value in excess of $1 million. They must use the services of a investment advisor for at least 60% of the relief association special fund assets. They can use the SBI for 60% of the Relief Association special fund assets, or they can use a combination of the services of an investment advisor and the services of the SBI for investments of at least 75% of the Relief Association special fund assets. So in order for a relief association to use the expanded list of authorized investments set out in statute, they would have to meet one of those four criteria. So if they met one of those four criteria, they could use the expanded list. If relief associations do not meet any of these four conditions, then they are restricted to the limited list of authorized investment securities, which I'll be going over next. So relief associations bound by the limited list of authorized investment securities are restricted, as again, to mostly fixed income investments. And these investments generally include things such as certificates of deposit, savings accounts, government obligations, and highly rated corporate obligations. And so those relief associations that are restricted to the limited list of authorized investment securities may invest up to 100% of the plan assets in mutual funds or exchange traded funds if those mutual funds and exchange traded funds invest solely in limited list investments, or up to 75% of the plan's assets if the mutual funds and exchange traded funds invest in expanded list investments, excluding other investments, which I'll go over and touch on briefly in the next slide. Any money market mutual funds held by the plan need not be included in the 75% limitation. and all relief associations do have the authority to transfer special fund assets to the SBI, the State Board of Investment, for investment in the Minnesota Supplemental Investment Fund. And so the SBI is responsible for the investment management of various retirement funds throughout the state, trust funds, and cash accounts. And so the Minnesota Supplemental Investment Fund was established by the legislature to provide an investment vehicle for various public retirement plans, including those of volunteer fire relief associations. And there are currently 6 investment funds within the Supplemental Investment Fund that relief associations can choose to invest in. And briefly, these 6 investment funds are a balanced fund, an actively managed domestic stock fund, the international stock fund, a money market fund, a bond fund, and then a passive domestic stock fund. And so investments in the supplemental investment fund also may conform to the statutory minimum or limitations as well. So those are various options under the limited list that relief associations have. Next, I'll touch briefly on the expanded list of authorized investment securities. The expanded list of authorized securities is available and includes additional fixed income securities, corporate stock, venture capital, resource investments, international securities, and then real estate interests. So corporate stock investments can include stocks of the United States and Canada, corporations from those countries, and those listed on an exchange regulated by an agency of the United States or Canadian government. So relief associations that are authorized to invest under the expanded list of authorized investment securities can invest up to 100% of the plan assets in mutual funds or exchange traded funds, although in this scenario, the underlying assets of the mutual funds and exchange traded funds must be authorized on the expanded list and are subject to the limitations imposed by the expanded list and in fact, state statute. So I will just touch briefly on 4 primary thresholds that relief associations and their brokers must take into account. The first is for corporate obligations. Below investment grade bonds, bonds BB and below are capped at 5% of the relief association's assets. Corporate stock and closed-end mutual funds, up to 85% based on a combination of all corporate stock and other investments. Other investments has a threshold up to 35%, and then emerging market funds or equity, and then international debt. So up to 15% of the total assets of the Relief Association can be invested in emerging market equity and international debt. These are 4 thresholds that if a relief association goes over these thresholds, they will need to come back into compliance with statute. And we would require a plan from the relief association or the broker working with the relief association on how they're going to get back under those specific thresholds. And I think that the descriptions of these various asset classes and their thresholds are quite good in the statement of position. But if you ever have any specific questions, please feel free to contact our office if you're not finding the information that you need in the statement of position.
Thank you, Mike, for taking a deeper dive into the 4 main areas our office checks for compliance. Let's launch into our final poll on this topic. To answer the question, what is the maximum percentage of special fund investments that a relief association can have in below investment grade bonds? Written in statute, a relief association can invest up to 5% of their investment portfolio in below investment grade bonds. If a relief association exceeds this threshold, we will contact and work with the broker to bring the relief association back into compliance. Please be aware that our office cannot provide legal or investment advice for relief associations.
All right, thank you, Maya. So I want to briefly touch on investment policies here. So investment policies provide guidelines regarding the investment of Relief Association assets and usually include target asset allocations. So each Relief Association is statutorily required to have an investment policy on file with our office. And your investment policy should include those following 6 categories you see on your screen. One of the things we do recommend that relief associations have in their investment policy is target asset allocations. And those asset allocations divide investments among markets to reduce risk and maximize return. And those allocations set forth suggested ranges based on percentage of the relief association's total special fund assets. So for an example, a relief association may specify in its investment policy that it targets 55% of its investment portfolio to be in equities, 40% to be in fixed income, and 5% to be held in cash. And some relief associations will define more specific asset classifications, including large or small capitalization stocks, developed or emerging market international equities, and sector-specific equity investments.
The last topic that we'll be taking a look at is the maximum benefit worksheet and how it applies to defined benefit plans and defined or monthly lump sum plans. So the OSA provides the maximum benefit worksheet to help relief associations calculate the average amount of available financing per active covered firefighter. And the calculation determines the maximum lump sum and monthly benefit levels the Relief Association is authorized to establish for the year. So relief associations are to perform the maximum benefit calculation on or before August 1st as part of the association's annual certification of the financial requirements and minimum municipal obligations. The maximum benefit worksheet calculates an amount that corresponds to the maximum benefit level the Relief Association is authorized to provide in payment to a retiring member. And it averages a Relief Association's non-investment primary revenue sources for the prior 3 years on a per member basis. And these primary revenue sources include in the calculation fire state aid, municipal contributions, and the 10% of the Relief Association surplus. The maximum benefit worksheet calculations reflect a Relief Association's non-investment revenue sources. And whether a Relief Association has a surplus or a deficit indirectly affects the calculation through the amount included from the 10% of surplus. So in years when markets are performing poorly and the Relief Associations are receiving larger contributions from the municipality, the maximum allowable benefit level most likely will increase along with the Relief Association's non-investment revenues. And so in this situation, the increasing maximum allowable benefit level may give a false sense or a false impression of the Relief Association's financial health. And so Relief Associations should keep this anomaly in mind when considering benefit increases. Even when markets are performing well, increasing the benefit level to the maximum allowable level may put the Relief Association into a deficit situation that requires contributions from the municipality to support the benefit levels. And so there are some limited circumstances in which a Relief Association that discovers it is operating at a benefit level higher than the calculated maximum benefit level may continue to do so. And so these criteria would take into account, has the benefit level been properly adopted? Did the Relief Association, along with the municipality, approve the benefit level before it was over the maximum allowable amount? The benefit level was at or below the allowable maximum benefit level when it was established. And then the final criteria was the decrease to the calculated maximum benefit level, was that due to either a decrease in fire state aid or an increase in the number of active members? So relief associations that qualify to be grandfathered in at their current benefit level cannot increase their benefit level until the annual calculation shows that an increase is allowed. So if your relief association does find that it is now over the maximum allowable amount, those criteria would be reviewed. And if the relief association was grandfathered in under those criteria, the relief association would then remain at their current benefit level until the maximum benefit worksheet indicates that the maximum allowable amount is higher than the current benefit level that they're operating at. At that point, they can again review whether or not they want to increase their benefit level or keep it where it's at, depending on the financial health of the relief association.
All right, thank you for attending today's question and answer training. If you have additional questions, please contact us at the contact information on your screen. Thank you and have a great day.